Okay, well, for more on those jobless claims and also on the housing starts that just came in, the building permits, kind of a mixed picture, I would say, for the economy. I want to bring in on the phone Action Economics chief economist Mike Englund. Mike is a Bloomberg best on economic data, and he's joining us from Boulder, Colorado. And Mike, give me your take. I mean, these numbers actually came in below, I think it was even your estimate. But does it really show that there's an improvement here in jobs?
Well, I think there's a common theme with claims in the housing starts data, and that's that over the last 4 to 5 months, these numbers have deteriorated fairly significantly, and that's not disputable. But we got good news today in the sense that we've given back a little bit of the market's concern with claims. We are slowly clawing our way back after a big upward ratcheting in April. In virtually every week of April, there was an excuse for higher claims levels, and it became pretty clear by May that the rate of improvement in the labor market has slowed. Now we're basically back to the 414 reading, which was actually the May BLS survey week reading. So we're going into next week's number, which with a level that's pretty much right in line with May.
So, Mike, what do you think is going to happen with these claims? Are we just going to stay around these elevated levels, or are we going to keep going up?
Well, we are assuming that there's continuing to be a distortion from auto supply disruptions. Those disruptions have proven greater than expected if you look at vehicle sales statistics and if you look at some of the production data related to autos. So we do think that that's a factor, and the claims numbers should be falling into July, through the rest of June and into July as a result of that. There may also be some pull ahead of the retooling that occurs in early July. Some of these factories may take an advantage, certainly not at the production level for vehicles, but at the parts level. So we may see less disruption in July, but obviously the market's not going to want to hold its breath and wait till those numbers. We are assuming, therefore, a downward trend, but the risk is that they stay up here.
And just quickly, Mike, tell me, we were talking with, I mentioned this, David Rosenberg, who was saying that at 475, jobs will start to contract. Is that something you agree with?
Yeah, that's roughly the area where we'd be back to a zero payroll number. And we are assuming that the payroll gains probably got ahead of themselves earlier this year, and maybe we got a little too enthusiastic. We're assuming we're around the 130 area, which painfully is just about the payroll growth that keeps track with the labor force and really implies no improvement in the unemployment rate. We had good unemployment rate luck for about 6 months, but now we're giving back some of that unemployment rate, and maybe by mid-year we'll find less of a drop in the jobless rate over the last 6 months than we had hoped for a few months ago.
Okay, Mike, thank you.